What is going on YouTube? It's Brendan from Market Makers. The title of this video is The Next Leg Down. Yes, we are on a rally, guys, but what is the trend? What is the primary trend? It is a bear market declination. So what do you do in a bear market rally? You look for resistances for the next level to short. Our last Bitcoin short that we talked about here on the channel worked out beautifully. So we're going to look at the next potential trade, okay? We're also going to look at the indexes. Guys, this video is brought to you by our two great sponsors, BITGET for all the cryptos and SimpleFX for the equities, commodities, and everything else. They even have a handful of cryptos there. Check out the video description for our links. The only way to get the bonuses is with our links, and the SimpleFX tutorial video is also there in the video description. Let's go ahead and jump into this, guys. So what are we looking at here on Bitcoin on the weekly? We are rallying, guys. We are pumping. I'm getting a lot of people sending me some screenshots from, I guess, Carl, Moon, Crypto, Four Flies. They're all putting out videos talking about 48K. Guys, we're going to keep it realistic. I'm going to show you what the next level of key resistance is and where we could look to actually enter a trade. I don't think 48K is even in the realm of possibility, okay? Just to put that out there. But let's go ahead and look at this. So on the weekly, what do? We pump past our 200, pumping up to the 233, which is roughly 24.5, 24.6, right there in that neighborhood. That could be a potential stopping point, but we need to drill down to the smaller time frames. On the weekly, our money flow index, you can see we are just coming out of the oversold area. But you know, this is just an indicator, guys. And guys, I keep my MFI, that is on 13. So if you're using one of the TradingView versions, I use it at 13, but you can experiment with it in different time frames, see what you like. And again, this is a volume weighted RSI. This particular version with the EMA cloud and the trend gradient moving average is a perk you get for joining our room. Join button underneath the video, and the Telegram in the video description for trade signals. All right, so I don't like that looking at this on the weekly as far as planning for a strategy. This is just for the big macro picture, right? So that's what I'm looking at here. But let's look at the daily. You guys know we've been tracking the daily very closely, and unlike the indexes, Bitcoin's actually getting some decent volume. You see the volume here? So this is normal volume. This isn't 3 sigma, 4 sigma volume, but it's still enough to rise you up. But you have your daily cloud, this cloud that we've had a gap for here, exiting our Wyckoff. We could hit this, roll back down, and look to make our cup. You've already made this cup on the smaller time frames, guys. We're going to go ahead and look at that as well. Got above our 50 daily moving average, and we're pumping up towards the cloud, expecting resistance here. And again, I do anticipate us coming back down. So one of the key things, guys, when you're looking at resistance levels, and I use trend-based fib, as you guys know, I trade heavily with Wyckoff, Fibonacci, and volume, okay? Looking at the trend-based fib, different ways to forecast this wave. So let's go ahead and do a couple of them. Going to this previous larger wave, up to that swing high, down to that swing low, you get 24.612 for your 1 fib, which you're pumping up to right on the edge of the cloud, okay? So again, you're always looking for confluence with your indicators. Look how these fibs have lined up, where the candles have hit. Have they used them as support and resistance? I mean, this looks pretty good. There's other ways to do this, though, on the daily as well. You could go to the beginning of this new lower level, this mini cough structure that we're in, take that swing low, go up to that swing high, and then down to that swing low. And you can see you're pumping above the 1 fib, heading towards the cloud, would give you the 1618 at 26,857. But wait, there's more. If you act now, you can do the current wave structure. Right here, you could take your swing low, go up to your swing high, down to your swing low. Again, this gives you 25,182. I prefer this method for this tighter wave when I'm looking at this and the larger wave, okay? Because both of them, they have some confluences here. Here you're above the 1 fib at 22,279. But as you can see, you know, you have the 25,182. It is inside the cloud. So what do you do when you have 3 different options like this to measure your resistance? Well, the key thing is to watch, okay? To watch your trade, to watch the chart, I should say. So the 1 fib here on this larger wave projection at 24,612, that's what you want to watch. Do you get turbulence there? Do you get candles coming up? Do you start making some type of structure, double top, and then start coming back down? If the answer is yes, then obviously that is a place you could short at, guys. But if you do this, come up, roll over, base on it, right? Make your cup type pattern and then start doing this. Obviously, this is not the wave that you want to use for your guidance. Now, if you come back and use it as support, you could say this is very accurate because you touched it, you use it as support. And you do have hits on this. You have the 618, 3 rejections here, 618 rejection there. So you have hits on this. That's why it's important to understand what you're doing. When you're using a trend-based fib, you are measuring dynamic market structure. Dynamic meaning it's fluid, it's changing, okay? You're getting these smaller wave projections here, larger wave projections. If you're just pulling a fib retracement, that's static. It's not accounting for all of these movements. You're taking point A and point B and that's it. The trend-based fib gives you an ABC projection, okay? Your A wave, your B wave, and this is your C wave projection. So it's important to play with it and look at the different levels where you could find resistance and see how accurate it is tracking. So I do expect resistance in this area, okay? Whether it's the 25,182 or the 24,612, those two are obviously very close together. 25,182 would be just above it. So this is an area to look for resistance, okay? And you want to see not just a single candle go up, guys. You want to see candles start rolling over like this, okay? Start making some type of top. Let's go to the 8-hour. 8-hour, you can see what's happening here. The 8-hour, remember when you defeat, because Bitcoin on the 4-hour has defeated the 200 and 233, you have to deal with them on the 8-hour. The Russell's in the exact same spot, by the way. So you have to deal with them on the 8-hour, and that's what you're pumping up to. Again, always looking for confluence. Here in the Donchian, pumping up to the very top of your Donchian, looking at our money flow, you had a double bottom here, and now you have divergence developing, okay? You have price rising, money flow going sideways. Again, the volume was pretty good on the daily. It's not ecstatic, it's not super strong volume. So when you encounter resistance, you're going to potentially fail at resistance levels. So let's go ahead and squish this in and look at a couple different things here on the 8-hour, and then let's go to the 4-hour. So on the 8-hour, let's turn the Donchian off. Where is this at? There it is. We can go ahead and put this in Wyckoff. Let me get rid of this trend line. Get rid of that. Get rid of the fan. Less distractions, clean chart, right? So let's do this. So let's go ahead and put this in Wyckoff and let's see what we're doing here. So Wyckoff, go our selling climax, our reaction candle. And you can see, I mean, look at how this lined up beautifully, okay? So you have your selling climax, right? You have your descent, your selling climax, large demand wick. You see the large demand wick? You come back up, you make your top, and then this is a change of behavior in the candles. So this is why this is your top. You roll back up, get an up thrust. From the up thrust, sign of weakness, volatility in the range. Come back up, you try to base on top of your Wyckoff structure, multiple up thrusts as you see, and you fall back down, volatility in the range. This also gave you a nice double bottom, right? And now what did you do here, guys? Look at this. You made your little cup pattern here, got a shot up, but over here you made the larger cup pattern. You can see this better on the 4-hour time frame. You got your 8-hour candles here, your cup pattern, and you shot up, and you literally used the top of the Wyckoff as your base. I mean, it's a textbook Wyckoff move, okay? This is famously where Jesse Livermore traded. He traded this pivot, okay? This was a Jesse Livermore pivot, which is on top of a Wyckoff structure in a bull market. So a clear indicator that a sign of strength incoming, okay? But now you want to look at your candles, you want to look at where you're petering out, and look at that as well in the smaller time frames. 4-hour time frame, guys. You remember we laid out this beautiful shift pitchfork, and let's go ahead and take some of this off. You can see we pump through it here, so let's go ahead and get rid of the pitchfork. This was playing out very nicely, and again, if we want to use a larger Wyckoff structure, I have that tighter wave projection here, which gives you the 1618 at 25,182. But let's go ahead and take this off. And let's do this. I mean, you can do the exact same thing on the 4-hour time frame, but you get more candles here, so you can see this a little bit better. So let's go ahead and lay this out. 4-hour time frame, selling climax. You can see your decline all the way down. There's your climax. Here's your reaction, change your behavior in your candles. Again, I already walked you through this. I'm not going to do it again. Here's your failed up thrust. This is what I want to show you here on the 4-hour because you can see it better with more candle structure. So you had your volatility in the range, right? You roll back over, make your cup, get your explosion. But here, you get all this chop, but you make a cup, okay? You get the volatility, you get your pivot, and now you're going up. So where's that going to end? That's what you need to look at. That's what we're trying to determine using our various indicators for confluence. Looking here at the MFI, let me go ahead and change this one. This one is set to 8, so I use 8 and 13 a lot depending what I'm looking at. Fibonacci numbers, obviously. But let's go ahead and look at this at 13. 13, you can see the money flow's flat, but price is going up, okay? So the money flow peaked right here on this candle and rolled over to the right, and now it's going down, but price is still going up. So you're getting some divergence here. What happens with divergence? And again, this is 4-hour candles, so let's not get overly excited. It's not daily candles, but you could be making a top here, okay? And then if you get some more euphoria, come back up. That's how you get these structures over and over in the marketplace, things like double tops and head and shoulders. Or you could just accumulate, roll back into a cup pattern, just like you did here. So you could do the same thing here. This is reaccumulation or backup, and then go back up again. So you have to watch it, and that's what we're doing. Now let's go ahead and look at this with the where are we at? Well, the 4-hour, I was going to say the 4-hour Ichi is going to be way below us. We already know that. And this is really thin, so you're getting more support here. See how the cloud's fattening up? Still extremely thin here. You have to watch you don't fall back down into declination here. But this is following the markets, guys. The markets are rallying because the markets have earnings. Only 14% of the earnings have come out so far. I think Tesla reports tonight. So we still have a whole nother full week or 2 weeks of earnings, and we haven't seen a lot of major revisions yet in the earnings because remember, this is past, this is Q2. So the market has been rallying on these earnings, but again, bear market rally, looking at targets to potentially fade, guys. So I like that 24.6 at 25.182. Now let's go ahead and jump over to, the indexes because you guys have seen a lot of Bitcoin now. Jumping to the indexes, this is what we're looking at on the S&P, guys. On the daily time frame, you have your 200, your 233, okay? You have your Ichi cloud just above you. I do anticipate a reversal on the S&P at some juncture. A key target, key psychological target as well as the 1 fib. This is the broader market at 4,028, which would mean you'd be coming up a little bit more. You're at 39.71, so about 30 points coming up, hitting this 1 fib. You have the 200 just above you. You have the Ichi cloud just above you. Again, looking for some type of structure, a bearish structure. As you guys know, these marketplaces print these all the time. When you come up to resistance, you get double top formations. Okay, this is a daily time frame, so we'll look at the smaller time frame. But that 4,000 number is a good psychological number. So 4,000 to 4,100. If we stay bullish, if these earnings start coming in more negative, you could turn around obviously at where you're at. Key thing to note here, guys, as you guys know, I track very closely with volume divergence. Look at the money flow. Money flow is already giving you like a double top type structure. The volume is something very important to note. You guys have seen my charts where I've drawn this out, but you can see this here, right? Every time you have this peak volume and then you have this volume divergence on these rallies up. So here's a good example. Let me get rid of these lines. There we go. I've showed you guys this before. I can show you this on the Nasdaq too, but you get this volume divergence where volume does not match the price action. Okay, this is a daily time frame. It's where I do volume divergence. So you can we'll just take it from the candle before here because that's even bigger. Okay, so you can see here going through, you have declining volume, you have ascending price. Okay, this is how you can make tops very easily, and that's what we're doing again right here. We have declining volume and you have ascending price. Look at this. So if we go from that candle, every single volume bar, now today's is still open, can't get it exact, but you guys can see it. Every single volume bar is lower than the previous volume bar, but look at the size of the candles popping up. Volume divergence, what does that mean? Remember, price can be manipulated. How can it be manipulated? The market makers, the big funds, what they can do is they just offer the assets at a particular price, and if retail pours in there and buys them, the price gets bid up, but it's not a large number of transactions. So you have price rising without the volume, the velocity to back it up. Now, this can go on for some time, but what tends to happen, and I've showed you guys this over and over, what tends to happen is you make tops, okay? Just showed you this double top here, here's a double top here, here's your volume divergence, price rising up, and then volume declining. Here's another good example, okay? I'll try to line this up exactly. Volume declining, price rising up. And you're doing it again on every single index, okay? You have price rising up and volume declining in this current trend. So it will peter out. And where will it do that typically? Where you have strong resistance. 1 fib, 40.28, 200 moving average on the daily. Let's go ahead and look at the 4-hour really quickly. We'll jump to the next index. 4-hour, all of these are the same, including the Russell. They all got above their 233s. The volume weighted EMA and the 200 moving average. This is the first time, by the way, yesterday was the first day, I think in 60 days that the S&P got above its 50-day moving average. But you can see what you're doing here because you've done this before. So the question is, will the S&P try to come up to 4028, which is up here? Or will it do this, which it has done multiple times before? You can see this when it encounters resistance, okay? Now, we looked at the volume divergence on the daily. Now, you're not overbought here. So you have room, but remember, it's low volume. So the volume-weighted RSI is not necessarily going to show you being overbought if you have very low volume, right? So this is just relative strength in the market, but you can see you have a jump up here off your cup pattern that you formed on the top of Wyckoff, because this is a 4-hour. You could put the same thing in Wyckoff here, and you see this over and over again, and the question is, where will it fade? So at this juncture, I'm looking at the 8-hour and the 4-hour a lot, because I mean the 8-hour and the daily, because the 4-hour we got above a lot of our resistance levels, right? So that's just something to be aware of. And let's go ahead and jump over to the Nasdaq really quickly. Knock some of these out. Nasdaq's getting closer here on this larger wave projection. You see you're at the 12,490, you're at 12,472. That's your 1 fib. You have the cloud just above you. You pumped above your 50 daily, okay? And you had Wyckoff going on here as well on the daily time frame. But the thing, just like with the S&P, guys, you have to, I mean, the volume's almost identical. Okay, look how minuscule this volume is. Look at that volume compared to these bars. Okay, not a lot of participation here. And look at the divergence again. And again, divergence can go on because as people are willing to continue to pay prices, higher prices, price will rise. And that's what you're seeing reflected on the chart. You're not seeing reflected the market participants. And again, your money flow index looks like it's printing a double top here. Okay, I expect this to roll over. Even if you get above it, you have a big cloud of resistance. I don't foresee us necessarily getting to 13,338 at the 1618 unless you just have some crazy bullish momentum. Here's Wyckoff on the 4-hour on the Nasdaq. So you can see, I mean, this is textbook, okay? I already walked you through this twice, but look at this. This is what I want you guys to see because people always don't understand the cup pattern. They're like, oh, you have a cup pattern, big deal. You did it here, okay? You did it here, but you did it here. You see this on top of Wyckoff is the most important. You rolled over and you pumped up. That is textbook Wyckoff Jesse Livermore pivot. You see that? Boom. Up. Now, how high will it go? Because just like the S&P, it does this over and over again when you encounter resistance. So we're above the Ichi cloud. I'm not going to even show it to you here on the 4-hour. That's why we are now shifting focus to the 8-hour, okay? But let's look at a couple things here and jump over to Russell. So you can see the money flow. We're getting closer to overbought territory. Not a lot of force behind the move. This is my EFI, my elder force. Not a lot of force behind the move either compared to this previous rally up. So again, this looks like it's going to be fading out soon, which is why I'm looking very closely at that 1 fib at 12,490. Now let's go ahead and jump over to the Russell. Let me get the daily. Russell's got a little bit more room here. I have 1860 on a fib, but that's taking this larger wave projection. I can get this down to 1830, but you also have the Ichi cloud a little bit higher up. Now, Russell typically is weaker, but it had a big day yesterday. It was up over 3.5%. It's up just over 1% today, 1.14%. So we're going to watch this and see where the Russell starts to peter out as well. The key thing to take away from all of this, guys, regardless of what index you're trading, if you're using Simple, using a different exchange, is understand you are rallying in a bear market rally and you're rallying into peak resistance. So at 1830, 1860 on the Russell, this is a potential, but it's also a potential to just fail on top of Wyckoff because you see it over and over again. This could print, come down into a double top like all of the indexes in Bitcoin will do when they meet resistance and they don't have that volume velocity behind them for the move up. And again, if we look at our volume here, let's see if I can expand this, pull this down some so you can see this. The volume bars are so small, it's really hard to show you. So it's the same thing. I'm not going to spend too much time on it, guys, because they track so closely together. But ever since you had that average volume bar, you've done nothing but decline and you have price rise. Again, you're building volume divergence in your price. And so this is a bearish indicator and will most likely roll over when you hit resistance that the buyers cannot push through, okay? So that's the 8-hour. The 4-hour, you can see the exact same thing as you saw the setup here. Pivoting on top of Wyckoff. I'm sorry, this is the 8-hour. Pivoting on top of Wyckoff. Look, just like Bitcoin. Right by the 8-hour moving averages, okay? So this is what we're looking at here. The 1 fib here I have drawn out with a tighter wave projection at 1830. This looks to be a very good level for the Russell, which is $10 away right now because, again, this is your 200, your 233 EMA, which you haven't touched yet, your volume weight at 233, the 1 fib at 1830 on this tighter wave projection. So this is what I'm watching. I do have the MFI printing what looks to be potentially a double top here. Not a lot of force behind this move in Elder's Force either. So this is something I'm looking at very closely, guys. In the 8-hour time frame, let's go ahead and see where the cloud is on the 8-hour. Get a little bit more confluence. You pump just above the cloud. You see that? You got just above the cloud. So you got your pivot up here on Wyckoff. You're trying to explode up. Now it's up to the market. You got volume divergence, but you got retail in there willing to pay higher prices. How much higher will they go? Again, I expect all of these to roll over. The large macro view of what's happening in the world. The ECB, European Central Bank, meets tomorrow on the 21st. Our bank meets at the end of next week, I think Thursday. Friday comes out with the GDP report, or that could be Wednesday, then Thursday. But anyways, we'll get into that. But that's next week. That GDP report most likely is going to show we're in a recession already in the U.S. These markets are going to roll over. I do believe they're going to lose their lows, including Bitcoin, okay? I see further decline. You got to get through this week and then the end of next week, and you're going to see some big moves in the market. Until then, you can look for areas of confluence and all these different indexes in Bitcoin and look for ways to make money. Find your path to financial freedom, guys. Another video coming tomorrow. Hope you enjoyed this one, guys. I'll answer all your comments in the comment section. Talk soon, everybody.